N Venu, MD and CEO of Hitachi Energy India, joins in. Hi, sir. Good morning. Season's greetings to you. Thank you very much for talking to us this morning. It's been another fantastic quarter from your quarters in that sense. You've got your order backlog at a record high as we see it at 8,910 crores, which will provide the company with 26 months of visibility. You want to shed some color on what these projects are, what this pipeline looks like, and what is the expected timeline and cash flow of these orders?
Yeah. So thank you, Samina. First of all, thank you for having me on the show, and season greetings as well to all of you. This quarter with a strong focus on execution, as well as converting our backlog into orders, and also operational efficiency have helped us to clock a very good set of numbers. And our orders have grown almost 12%. Our revenue has clocked 26% year on year, and then margin we have improved almost close to 280 basis points on a quarter-on-quarter basis in that. So this is also close of our 2 quarters. So if you take on a half-yearly basis as well, our orders have grown more than 50%, and our revenue was consistent, 27% growth, and margin we have improved almost 220 basis points on a half-yearly basis in that. Clearly shows that our strategies are in place, and the strategies are also working to give a sustainable growth of all our KPIs. And as you rightly said, we have at the end of the quarter, we have had a backlog of almost 8,900 crores, which gives a visibility of almost 26 months. And we see that demand tailwinds arising out of energy transition, not only in India and across other parts of the geography, are very huge. And in anticipation of that, we are making all the efforts to ensure that we grow in line with the market or grow above the market, and also while growing above the market, we'll also improve the margins.
Mr. Venu, can you elaborate on the anticipated impact of the 3 large HVDC projects that are expected by the end of financial year 2025? And how will this influence future revenue growth and start contributing to your revenues?
So sure, these 3 projects, what you're talking about, are quite a large project. So we are at this point in time, we are bidding with our customers. And these large projects will definitely have a huge uptick in our revenues as and when we are successful in those projects. And those projects are multi-year projects, runs up to almost 4 years execution cycle. And we definitely whatever the orders arising out of these things.
Right. So you're already growing at a significant run rate in terms of your top line, anywhere in the range of 25 to 30%. Can you possible to quantify how much more will these 3 orders contribute to? Because from the sound of it, you clearly will outdo yourself going into FY26. So anywhere between 30 to 40% growth, likely on back of these 3 big order wins?
No, we would not like to quantify those things, because right now those are in a bidding stage, and it's fair that we retain that. As we know, we are only bidding, we are still not successful yet. But leaving that HVDC projects, if you really look at our strategy, has been that we want to grow in line with the market, higher than the market, and we are consistently showing that in the last several quarters that we are growing far higher than the market things, because we have several levers. One is that we have a high growth segments like transmission and renewable, rail, data centers, etc., are high growth segment for us, which are really fueling a lot of order intake into that. This quarter as well has given a lot of orders from renewable and data center industries, etc. in that. So we continue to focus on these high growth segments, while also looking at the very big tickets like HVDC projects whenever they get matured in that. And in addition to that, we are also focusing on our exports. Today, exports on an overall basis, we take on a year-on-year basis, we are around 25%. And this quarter was 22% of our orders came from the exports of different geographies, different countries. And those would also help us in the revenue accretion going forward.
Mr. Venu, good morning. Neeraj here. Just trying to understand, there are 5 key segments, right? And while railway and metro may have shown a YOY dip, the others have done really well, including particularly data centers. Where is it that over the next 3 years is the largest potential? I'm guessing, I'm not saying where you will grow, but from an industry perspective, where does the largest potential lie between these 5? All of them will do well probably. Which is the first amongst the equals?
I think next 3 years, if you're talking about the industry standpoint, renewable will be definitely far bigger market because India as a country has set a very ambitious target by 2030, want to add 500 gigawatt of renewable, and that means we need to do more than 2 to 3 times more than what we have been doing as a country as a whole. So that will definitely has a huge potential opportunity pipelines for all the stakeholders, including Hitachi Energy, and that's where we are doing extremely well on that. And in addition to that, the transmission, again, the government has set itself a target of 500 gigawatt of interstate transmission systems to be deployed by 2030. That again needs a huge amount of opportunity. That includes the HVDC projects you have been talking about, and those are also high growth segments in that. And the third one where I see is a huge opportunity is the data center market, and there is a potential that in the next 3 to 4 years, the capex required for the data center market as a whole industry-wise is in the excess of 60,000 crores, and that gives a huge opportunities for company like Hitachi Energy, and that's where we have been doing on that. So if I really want to pick up 3 or 4 things, it is renewable, it's a transmission, it's a data center, and followed by the industries.
One more question from mine, Mr. Venu. Is it a pick and shovel strategy that you are going, or do you believe the pick and shovel companies will benefit more than the actual energy companies in all of these segments, whether renewables, whether transmission or data centers?
No, all segments are growing because the tailwinds of the energy transitions are huge. All the segments are growing, but when you're talking about a specifically 3, 4, 5 segment where we really need to double up are 3 times of what they are being growing, and these are the segments I've actually pointed out, and this will be adding marketplace for every potential technology providers such as Hitachi Energy, or also some of the EPC contractors who are playing in that place as well.
You've set out a pretty aggressive margin expansion plan for FY26 to FY27. But the fact remains that Forex is volatile and commodity-related pressures do exist. I'm also aware that 60% of your orders do have a price escalation clause. Does that provide enough protection for you? And will that sort of help you achieve the margin expansion looking at in FY26-27? Or do you anticipate increased pressure on the cost side?
Yeah, of course. It's both ways. There is always with so much of things going on the geopolitical standpoint, and there's always a challenge on related cost, whether it is a transportation, logistics, or freight, etc., including some commodities where we have highly depend on imports, like our transformer, CRGO, all those things definitely has a cost pressures. But as we have taken a lot of actions up front. We are able to do a lot of frame agreements with our suppliers in a little bit longer horizon compared to what we used to do on a case by case. So those things would help us to navigate some of those risks in that. As you rightly said, more than 60% of our contracts do have price variation clauses built in that. So that should also help us to navigate within that. So we are aware about the challenges. But at the same time, management is very hopeful that we will navigate. And our margin, guidance was that we reach a 10% EBITDA by end of this financial year, and from there, we stay there, sustain those kind of margins.
I want to just get a sense from you on any third-party additional projects that we can expect. I do understand that you've had or anticipate having a few potential orders from the parent. You want to give me a sense of when we can expect that and how significant will this be and what will this do to your numbers in the next couple of quarters?
We have actually taken some of approval for the related party transactions because those are breaching the threshold value prescribed in that, so 10% of our company value. So those things we have taken approval in line with the governance, etc. We do those orders have been coming in consistently, on a quarter-on-quarter basis in that, and those things, some of them, everything, whatever approval we are taken, that everything will not come here because some of them also we are bidding together with our parent organizations, and once we are successful, then only we come in that. But since we are making a commitment, and that's the reason we are taking up role in that. So we have, as I said, our exports as a whole basket is We set ourselves as a target of 25%. We have reached the target in FY 2022. We are sustaining that thing despite growth in orders. So our 25% share of the total orders coming from our exports, which includes our companies, our parent companies, our other companies' orders.
Got it. Well, wishing you all the best for continued growth, Mr. Venu. To you and yours, from all of us at NDTV Profit, a very happy Diwali and a prosperous New Year.
Thank you. Same to you. Wishing you all a very happy, prosperous Diwali to you as well.